Welcome to Notepad. I'm your host Ibrahim Sani. Over the past few weeks, we have been observing a few fund managers and whether or not they have been performing well or poorly over the past few months, particularly when it comes to trying to benefit out of the prices being discounted following the pandemic. One company that is quite interesting to observe is, of course, Pangolin Investment Management. Pangolin Investment Management, with their Pangolin Asia Fund, has been a long-term investor in this part of the world, and they have diversified their geography by investing over 60% in Indonesia, over 20% in Malaysia, and they are in retail and they are in a lot of other things as well. One thing that is important to note is that Pangolin Investment Management has also diversified into aviation, starting off the Pangolin Aviation Recovery Fund, headed by Mohsin Aziz. A few months ago, I interviewed Mohsin about the aviation fund, and last month they are up by 20%. So joining us for this particular episode is James Hay of Pangolin Investment Management. James, how are you? Let's talk a little bit more about the Pangolin fund. How is it doing right now?
Well, I'm always optimistic. I'm a value guy, and I can always find value somewhere. So that always makes me excited. 2021, a one-year outlook, as you know, is a short-term outlook for me, in particular for Asia. If we just start on Asia, I think valuations in Southeast Asia are crazy. And when we look at things like property companies in Malaysia, things like IGB and E&O and others are trading at something like 20% of net asset value. And we all think that's normal now. It's completely abnormal, but we got so used to this part of the world being so cheap for so long, we think it's normal because of investor disinterest. So at some point, and I don't know when it will be, the world will rediscover this part of the world. And the outperformance of NASDAQ, etc., for the last 10 years will not continue for the next 10 years. So I really believe that overseas investors and all investors should be overweighting this part of the world against NASDAQ and Bitcoin and everything else, which is clearly bubblish.
One of the things that you said in your newsletter to your investors is that the thing that is different from this time around versus the 1998 story is that now you have foreign investors coming in and outsiders joining in terms of looking into this part of the world. Do you feel that they have a greater appreciation towards what is happening currently in this part of the world, considering that some of the things that some of the companies that are being traded is actually out of whack? You raised IGB, and when you put together all the other property companies like EcoWorld, Glomec, LBS, Bina Group, they're all trading at about 22, 21 against net asset value. Do you feel that some greater appreciation will be gotten based on foreign investors looking into inside?
Yeah. So I just pinpointed property companies in Malaysia as an example. What I was trying to say is, first of all, I started investing in 1998 for myself, and we had the NASDAQ crash in 2000, which lasted 2.5 years. NASDAQ fell 78% at that time. My portfolio of Malaysian stocks fell about 30% over a much shorter period and then started recovering. And I expect that when NASDAQ pops, we will see some downside in this part of the world, but that's just another opportunity to be buying. And I think the downside will be much less limited. In terms of investor interest, there is hardly any investor interest at the moment in Southeast Asia. And that's why these companies are so cheap, because money has been sucked into NASDAQ, etc. You know, it's been sucked into China, into China tech stocks, and some Indian ones as well. But there's so little interest here. Malaysia's 1.5% of the MSCI Asia ex-Japan. That's smaller than HSBC or Alibaba or just one particular company in China. So it will come back because the value's there. I'm convinced of it.
Let's talk about some value. As we started this interview, aviation is up 20%, but that must not be your focus, right? Pangolin is renowned for having a long-term view on things. In fact, if you benchmark against your own strategy, Pangolin Investment Management strategy against, say, for instance, the NASDAQ or the MSCI Asia, you guys have been outperforming these kind of indices for a long time. But surely the aviation sector is up to something here. When things have been devalued at rock bottom, the only way to go up is up. Do you feel that is the case right now?
Yeah, so I never thought I'd start an aviation fund, but I was in the UK last year, and Motion was in the UK, and he wasn't working. And I said, "What are you doing?" And he said, "I'm not really doing much." I said, "Well, let's start an aviation fund," because I talked to him about it before, and I sent him elsewhere to start one. I never thought Pangolin would do it, but it was about September. It really was at pretty much all the lows, and so we agreed to do it. The great thing is that aviation is a great long-term story. Passenger growth is over 5% a year. Most people in the world have yet to ever fly. You look at Asia, China, India, Africa, South America. Most people have yet to fly. So there's a long-term story, but there's huge market dislocation. The thing is, when we wrote the prospectus for the fund, we quoted IATA, who said that they reckon that aviation would be back to normal by about 2024. What we're actually seeing now with vaccination rollout, particularly in certain countries in the West, is that some bits of aviation will be back to normal by next year. Yeah, if you look at holiday companies from the UK, for example, or internal flights within China are already there, or internal flights with the US, they will be back to normal in 12 months' time. Absolutely. So therefore, it's not kind of you buy these stocks and hold them for 2024. It's at the moment, one has to look at the fundamentals, because the fundamentals are worse because of what happened last year. But you then say, what's the passenger traffic going to be at this airport? Or what's the load factor going to be at this airline in 2022? And what does that look like against its share price now? So things are moving very, very fast. And in the first month, we launched on January the 1st. It was a terrible time to launch. We had all the new mutant strains and other lockdowns. And the fund was down 6%. But as you can see, as the vaccines have been rolled out and the proof is there that the vaccines are working, we are now seeing a lot of interest in aviation, and the fund was up 20% last month, and it's up another 1% this week. I mean, it's really moving quite fast, despite Wall Street having a very wobbly day a couple of days ago.
Yeah, it's also the people inside the aviation fund that you have. Of course, the country is pretty aware of Motion Aziz. You also have Vinchal Budiharjo joining in as well. Do you feel that because of the experiences that these individuals bring into the firm, it becomes a more realistic conversation to be had? Because remember, as you guys pointed out, it's not just about the aeroplanes and the aeroplane makers. It's everything end to end. It's a supply chain that is involved. It's the transportation that is involved. It's the retail businesses within the airports, for instance, or the third touch point that leads to the airports that is involved. All of them are completely out of whack right now. But there will be some recovery to be seen. And as we've seen in February, yes, the 20% recovery, as it seems.
Yeah. So we're having very strong recovery in the sector. Now, I wouldn't have launched this fund without Motion, because Motion I've known for many years. He was at AirAsia for 6 or 7 years before doing 10 years at Maybank. He was at AirAsia when they started with something like 6 planes, and it left when they had 120. I may have the numbers wrong. Motion will correct me. He's encyclopedic on the airline industry. He's also a person that the industry consults. I mean, he's that good. Vinchal runs the office in Singapore for Pangolin Investment Management. He's been with me 16 years. He's a very experienced fund manager, as I am too. So Motion comes up with the ideas, and then Vinchal and I sort of really act as devil's advocate. And generally, we agree with Motion on pretty much everything. Occasionally, we've made him go back and scratch his head slightly, but Motion knows much more than we do, but we know much more about portfolio construction, for example. And there is a difference between being an analyst and a fund manager, but it's, everyone's gelling together very quickly on this. It's good fun. With the Asia fund, when we want to buy something, we tend to buy a very small illiquid company and hope we get it right, and hope everybody else discovers it in 5 years' time. This fund's completely liquid. It has weekly liquidity, and that was really at the request of institutional investors. They can get in and out with 2 days' notice, and we can buy anything we want, just like that, which is not the same for Asia.
Sourcing for funds is going to be a big issue for you guys. Do you feel that you have enough investors coming in for this particular round, or is there
I have two very different type of investors here, right? I mean, I think for Asia, the value proposition is so great. This is the kind of thing, if you're thinking 10-year money, you should be investing in Southeast Asia, right? Hopefully with us, if not with another good manager, or do it yourself. The value is there. For the aviation fund, this is possibly the sort of thing, I don't know if I'm allowed to say this, but I will risk it. It's possibly the sort of fund that could go up a couple of times fairly quickly, and then we see what happens, right? But there is also huge downside. If there's a new mutant strain that comes out which doesn't work, or there's some horrible reaction to vaccines, this fund might collapse. So this is the sort of fund to put not everything in, but really there is a good chance of significant upside. And I'd have said the downside's a bit less because a lot of these companies are still nowhere near where they were, say, at the end of 2019.
But again, focus on the aviation fund. We've seen how some companies continue to struggle, particularly in Malaysia. AirAsia is a big drag in terms of how we can move forward with that particular company. In fact, they have, in a way, diversified into Food Panda and Grab, if you think about it. Malaysia Airlines is being pulled out yet again, a familiar story since the 90s. And Malaysian airports is not going anywhere. So it seems like aviation is fun to be investing in, but not so much aviation Malaysia. What's your view on this?
Well, I mean, the great thing about the fund is actually it can invest in any sector and any geography. And at the moment, Motion is not telling us we should be buying AirAsia, AirAsia X, Malaysia Airports, or any of them. There's enough else out there. So we own Airport de Paris and I should have pronounced it better, Aéroport de Paris, and we own Shanghai Airport. So he thinks the move is going there first. There's a very low vaccination take-up in Malaysia. I don't think people are even that bothered about getting vaccinated here, because most people, it's not going to change their lives, and actually the lockdowns and the government have done so well. It hasn't been that dangerous a disease, so people are quite slow to do that. That's what's going to change things here. But there are so many airlines in the world to buy. Listed, that AirAsia isn't necessarily at the top of the list. We are a global fund. If Motion comes to us and starts saying we should buy AirAsia, then of course we'll listen to him. But he's not doing so at the moment. We own Spirit Airlines in the US, which is the sort of AirAsia equivalent in the US. But it went up about 50%. So we've actually sold that one now. Because it's really done everything we think it's going to do in the short term, and there are better opportunities out there. Things move very fast and some things don't move, so it's a matter of, in a way, of rotating back into something else, as long as the fundamentals are there as well.
Okay, thanks very much, James. We'll take a pause for now. We'll be right back after these messages. Welcome back. I have with me James Hay of Pangolin Investment Fund. We were talking about a lot of the stuff, aviation mostly, before the break. Right now, let's focus more on the Pangolin Asia Fund. James, we've seen how you have diversified your investment strategy in terms of the geographies in this part of the world. But more importantly, you are over 60+% in Indonesia. Is Indonesia going to be a big feature for the fund in the near term?
Yeah, I think Indonesia has huge promise. It's fairly close to being a functioning democracy at the moment. I think Indonesia now has a middle class, and they maybe not middle class in definition of Malaysian middle class, but an Indonesian middle class that can now afford to spend money on consumer goods. And what that means is, if you are Nissan, if you go back 10 years ago, if you wanted to expand in Southeast Asia, you'd almost certainly put your plant in Thailand. You now have a new market in Indonesia with 270 million people. And 10 years ago, nobody could, or very few people could afford a car in Indonesia. Now lots of people can afford cars in Indonesia. And interest rates have come down significantly in Indonesia over the years. So car and other vehicle financing is affordable. So someone like Nissan can now put a plant in Indonesia, knowing it can now sell to the domestic market, which underwrites the investment, as well as export to other bits of ASEAN as inter-ASEAN trade becomes easier. So Indonesia is pulling in significant foreign investments. We also have a commodity boom at the moment. As a house, we don't invest in commodities because if I get bullish on coal, the price will halve tomorrow. But a lot of people benefit significantly from higher commodity prices in Indonesia, which means they go and buy more burgers. They buy more KFC, we're shareholders of Fast Food Indonesia, which has the KFC franchise over there. They buy more motorbikes, etc. So it all feeds through. I think there's a lot of value in Indonesia, and I think it's a very good long-term story as well.
You closed 2020.
But there are very attractive companies in Malaysia too. Yeah, it's a lot of it's liquidity in Malaysia. Some of the problem is these things are just too small.
What do you mean, like IGB or something else?
No, I don't mean IGB. Actually, IGB is quite illiquid. I mean, IGB ought to be $1 billion stock. The problem is there is no analyst coverage, right? I mean, if it traded at 40% of NAV, right, it's just incredibly cheap. It would be $1 billion market cap, billion US market cap, which means all the funds would have to hold it. So it's just a matter of who's going to be first in a way. I mean, it makes no sense, this company trading below the value of its holding in the REIT. And of course, you know, the long-term money is made in the developing, not in the REIT. You develop the piece of land and sell it to your REIT. So for a long-term holder, it's in IGB. But if I look at something like Inature, for example, which is the Body Shop franchise holder, which we don't own because there's no free float. I think the free float's only 25% or something, and it's not even that large a company. If we wanted a position, you know, we'd want 10% of the business. So there are a lot of interesting companies which are quite small, which are at the moment undiscovered, but maybe smaller funds or individuals or whatever, they will pick up on these. I mean, that's just one example. But for very large funds like Fidelity, etc., Malaysia's a real problem to actually invest in real businesses with the kind of liquidity they want.
Let's talk a little bit more about some of the retail businesses that you guys are in. We commonly talk about Padini in Malaysia, but there are a lot of businesses, say for instance in Vietnam, retail is a big deal there. It's going to be a big powerhouse, but you guys are not yet in Vietnam. Any reason why?
Yes, I mean, a few reasons. One is I can't read Vietnamese, okay? And a lot of the accounts are in Vietnamese. So we'd have to employ someone to do that for us. Secondly, a lot of the good companies are actually government-linked companies as well, and I don't like investing alongside governments in this part of the world. I just, you know, they're all great until they're not. So we don't like being in GLCs. Thirdly, there is easily enough for a fund of our size at the moment to find in Malaysia, Singapore, Indonesia and Thailand, which is our areas of expertise, I'd say, at the moment. So we don't need to be in Vietnam. Vietnam is a very good story, but it's outside of our area of great expertise. We look at it. We've visited companies there in the past, etc. But there is enough value, I think, to be found where we are. So that's why we're not there. Yeah.
Okay, let's take a look into the entire investment for 2020. It was down 7%. And this is, when you compare against the past 10 years, is actually quite okay compared to other years. What was driving the cushion or buffering that cushion of the portfolio for last year? I would assume, I would assume a fund like yours would be completely out of whack based on last year.
I screwed up last year, and I put my hand up to that. And in about March, April, I just thought, where's this coronavirus going to go? Is it going to be very bad? Right? Is it going to be really bad? If you remember in March, we were scared to sort of brush against somebody's arm in the supermarket. Or is it going to be okay? And I don't know. So I took the view that, as I don't know, I'm going to sit on my cash and sit on my hands. And so I sat on too much cash. And in about the end of August last year, I sent a newsletter out to my investors saying, actually, coronavirus isn't that bad. I now think it's time to start buying. But for me, it was a 50-50 bet, and I sat on my hands. So we actually missed a lot of the basically upside from March to April. Otherwise, from April to September or so. Otherwise, we'd have been up last year. So it's a good lesson. I took my eye off the absolute value of the companies and took a slightly macro view. It's the first time I've done it in 16 years. I got it wrong, which is even better than getting it right, because it means I won't do it again, probably for another 16 years. And I will stick to investing purely on fundamentals in the company. But actually, it was a wrong call. I think over the long term, it won't matter that much. Won't be, you know, as long as we continue to buy companies which are cheap, it won't matter that much. But actually, we could have been up last year had I taken the view that everything would be all right. But at the time, I didn't know, so I didn't know, so I didn't do anything.
Oh, well, don't be too hard on yourself, man. I mean, aviation's up 20%. Let's talk more about what you are going to look at for 2021, for the rest of the year. I'm sure it's going to be a very busy year for you. Things are cheap right now. What kind of things are you shopping? Where are you shopping at right now?
Well, in Asia, we don't have much cash at the moment, so I would like to think we need to get more cash by buying. I think this is a great decade opportunity to be buying in this part of the world. We're looking at Malaysia and we're looking at Indonesia. Really, there are a lot of cheap Malaysian companies here, and I don't like giving out my names too much. We have Padini. What we saw towards the end of last year is that foot traffic in IGB and Padini was back to 90% of normal before we had the other lockdown again, and they rather missed their Christmas season this year, or a lot of it. So that will recover very fast. So we'll be looking at the consumer, and we'll just be looking elsewhere. I mean, I just hope things don't go up too much before we can actually get some more money in. But we're looking where we're always looking. And Thailand, we own very little in Thailand. It's 1% of the fund at the moment. But there are a few companies in Thailand which look pretty attractive as well, based on their historics. And all these countries probably will return to normal. One has to keep an eye on the politics in Thailand, of course, and how that's going to affect things. But if you let people get on a plane, they will all be back on a beach in Thailand very quickly.
Well, I would dream to be on a beach. I'm already dreaming to be on a beach in Thailand right now. But sorry, I circle back just now. What about the politics in Malaysia? Is it bothering you?
No, not really. I don't think it's bothering anybody really, apart from the MPs. I mean, must be some people must be bothered by it. I've lived here 27 years. I think that the interesting thing at the moment is what happens with the trials that are going on, and perhaps without any parliament sitting at the moment, it doesn't matter very much if Muhyiddin has a majority or doesn't have a majority. So there's no perhaps pressure one way or the other, which there might otherwise have been on those. So we'll have to see what happens there. So that makes it quite interesting to watch. I don't think anyone's too bothered. I don't think anybody wants an election apart from MPs. I don't think anybody wants the virus spreading all over the place. So I think actually the emergency, of course it's terrible. No way should this country be under emergency, but I don't think anyone cares that much about it.
Right. Final question to you regarding your investors. When you do fundraising, you do meet them face to face mostly, and of course this has not been the case for the past few months, 13 to 14 months already. Is this going to impede you on reaching out to potential investors on raising funds, or is doing a Skype phone call sufficient for you to raise millions of dollars of funds and putting it into your fund?
I like to go and watch the Rolling Stones and football matches all around the world, and I add on investor meetings. So that's rather cramping my style at the moment because none of that's happening. I think in the end it's much better to meet people face to face. Of course, I've saved a fortune by doing everything by Zoom. Zoom is not quite the same. It just isn't the same, and that comes to whether I'm speaking to investors, whether in the US or whatever, or if I'm meeting a company in Indonesia. You learn much more across the table. You think of another question, and you tend to be just you in the room and not somebody else. So, in the moment I can travel and see companies in Indonesia or Thailand or wherever, again, I will be doing so. And the moment I can fly to the US and Europe to meet my clients, I will do so. I think it's a very enjoyable part of my job, and it's part of the reason, something I really enjoy is getting their feedback. Otherwise you just need other people's opinions.
So what is the timeline that you're looking at on the possibility of doing that? I mean, the officials will say whatever timeline that they think it's possible, but you as an individual, Malaysia's already said they're going to welcome business travellers back, right? So they can come here, right? And it's a matter of my son will be in the UK. He's going back to school in the UK next month. And I will probably go over in May or June or so. If I'm not vaccinated here, I'll get my vaccine there. I mean, for sure, there's going to be a surplus of vaccines in the world by about July. Okay, getting vaccinated will not be a problem. So I'm pretty sure that second half of this year, wherever I want to go, I will be able to go and get there. And I'm quite old too, so I'm fairly up the queue for a jab as well. So I'll give it if I survive. Pleasure talking to you, James. That was James here of Pangolin Investment Management. If you missed any part of this interview, just head on to AstroAwani.com. Look for Notepad over there. There are plenty of interviews like this. If you want to learn more about Pangolin, just search for Pangolin Investment Management. They're everywhere on the net. Until then, thanks very much for watching and goodbye.